Hello champions, I am really excited about how effective this video is going to be for you. In this one video, I am going to summarize the whole of the default tax regime for you in one place. The problem is 115 BSE, the default regime, we learn in bits and pieces in various chapters. In our basic concepts, we learn the tax rates. Then in each chapter, in each head of income, we learn what will be the impact of the default regime. We will learn what will be the impact if assessee follows a default regime, which benefit you will not enjoy, which benefit you will enjoy. Then there is a particular provision with respect to 115 BSE in your returns of income chapter as well. So like this, your entire default regime is spread across various chapters. So in this one video, I'm going to consolidate it all in one place and discuss it with you all. Listen to me as carefully as you can, guys. You will find this video really helpful. First of all, 115 BSE is applicable for whom? It is applicable only for individuals, HUFs, AOP, BOY and AJP. It is applicable only for these 5 assessees. It is not applicable for companies. Okay, point number 1. Then comes point number 2. What will be the basic tax rate under 115 BSE? And by the way, this is your default tax regime, which means if the question doesn't say anything, by default you have to apply 115 BSE only. Only if the question says assessee has opted out of 115 BSE, only then you will apply the normal regime. Otherwise, by default, you have to apply this 115 BSE regime only. So, under 115 BSE, what are the basic tax rates? The basic exemption limit is going to be 3 lakh rupees, irrespective of whether the assessee is a senior citizen or a super senior citizen, doesn't matter. For all assessees, the basic exemption limit will be 3 lakh rupees. Up to 3 lakh rupees, no tax. 3 lakh rupees to 7 lakhs, 5% tax. 7 lakh to 10 lakhs, 10% tax. 10 lakh to 12 lakh, 15% tax. 12 lakh to 15 lakh, 20% tax, and more than 15 lakh, 30% tax. Please notice it is 5, 10, 15, 20, but however there is no 25% in this slab rate at all. Okay, so up to 3 lakh no tax, and then 3 lakh to 7 lakh, 7 lakh to 10 lakh, 10 lakh to 12 lakh, 12 lakh to 15 lakhs, and then more than 15 lakhs. Okay, remember, even if the assessee happens to be a senior citizen or a super senior citizen, I don't care. The basic exemption limit will always remain 3 lakh only. Okay, this is the second point. Then comes the third point. Special rate incomes. Under 115 BSE also, the special rate incomes will be taxed at the special rate only, which means even under 115 BSE, even under the default regime, if you have any casual incomes, they will still be taxed at the rate of 30% only. If you have capital gains, like for example, if you have LTCG under section 112, before the amendment, it will still be taxed at the rate of 20%, and after the amendment, it will still be taxed at 12.5%. Basically, whatever are your special rate incomes, on those special rate incomes, the special rate of tax will continue to apply, just like what you do under the normal regime, guys. Under the optional regime, same thing you will do even over here. So whether the assessee is following 115 BSE, whether the assessee is opting out of 115 BSE, doesn't matter, guys. Special rate incomes will be taxed at the same special rate only. Okay, if assessee is following the default regime, point number 4, the concept of AMT, alternate minimum tax, will not apply. AMT concept applies only and only under the normal regime. Okay, then comes your point number 5, section 87A rebate. Now under 115 BSE, if you want to enjoy 87A rebate, 3 conditions have to be fulfilled. Condition number 1, you must be an individual. Condition number 2, you must be a resident, and condition number 3, your total income should be within 7 lakhs. If all these conditions are fulfilled, maximum 25,000 rebate you will enjoy. See, if this was a normal regime, then instead of 7 lakh total income, you would have had 5 lakh limit, right? Total income has to be within 5 lakhs. Maximum rebate you will get is 12,500. This is as per the normal regime. But under 115 BSE, total income limit is 7 lakh, not 5 lakhs. And the maximum rebate is double. The maximum rebate is 25,000. So assessee should be an individual, resident individual. Total income has to be within 7 lakhs. If all these 3 conditions are fulfilled, then the maximum 87A rebate you will get is 25,000. But remember, there is a unique point in 115 BSE with respect to rebate, and that is your relief relating to rebate, right guys? Wherein if the total income happens to be more than 7 lakhs, even in those cases, you still enjoy rebate in some situations. But how will the computation be? Let's take an example. Let's say the assessee is an individual. Let's say assessee is a resident. Let's say his total income happens to be 7,15,000, and they're asking us to find his tax liability under section 115 BSE, which means your assessee is following the default regime. So under the default regime, tax liability has to be computed, right guys? So first of all, you will find the basic tax. Now how will you find the basic tax? Up to 3 lakh no tax, 3 lakh to 7 lakh, 3 lakh to 7 lakh, whatever, we have 4 lakh income in this bracket. On this 4 lakh income, 5% tax, which will be 20,000 rupees. Then 7 lakh to 7 lakh 15,000, that is 15,000. On this 10% tax, which is going to be 1,500. So your total basic tax will be 21,500. Then from this you will subtract 87A rebate, right guys? So 87A rebate, what are the conditions? Assessee should be an individual, assessee should be resident, total income should be within 7 lakhs. But your total income is more than 7 lakhs. So you will come to this part of the flow chart. Over here, your step 1 will be total income minus 7 lakhs. Total income is 7 lakh 15,000 minus 7 lakhs would be 15,000. Then what is your basic tax? Basic tax is 21,500. So step 2 minus step 1. Step 2 minus step 1, which is going to be 6,500. That will be your 87A rebate. So therefore your net tax as of now would be 15,000 rupees. And to this we will add cess at the rate of 4%. So plus 4%, 15,600. This would be the final tax liability of your assessee, already in multiples of 10. Therefore no need of any rounding off also. Okay guys, so if the total income happens to be more than 7 lakh, even in such cases you will have rebate. How will you compute? Step 1 would be total income minus 7 lakhs. Step 2 would be the basic tax number, and step 2 minus step 1, this number will be your 87A rebate. But step 2 minus step 1, if it happens to be a negative number, then no rebate. Okay, if it's only if it's a positive number, that positive number will be a rebate. Step 2 minus step 1 will be your 87A rebate. Okay, then comes your sixth point, your next point under 115 BSE. Under 115 BSE, maximum surcharge rate is going to be 25%. Under the normal regime, the maximum surcharge rate is 37%, right? But under 115 BSE, maximum surcharge rate is 25%, and marginal relief says all these concepts will apply even over here. Okay, then comes the main discussion in 115 BSE. How will the total income computation change? Let's go point by point, chapter by chapter. First of all, let us talk about the salaries head. In the salaries head, 5 things will be impacted. See, generally LTC, you get an exemption under the salaries head, guys. Whatever leave travel concession the employee gets is fully exempt, provided the employee goes on a vacation somewhere in India twice in a block of 4 calendar years. The LTC component is going to be fully exempt. But however, if the assessee is following 115 BSE, then LTC will be fully taxable, no exemption. First point. Then if assessee is following the default regime, HRA no exemption, guys. HRA will be fully taxable. Third point, allowances will be fully taxable, like children education allowance, children hostel allowance. You will not get any exemption. All the allowances will be fully taxable. But however, there are 5 allowances where you will continue to enjoy exemption. That is transport allowance. You will continue to enjoy 3,200 per month exemption for blind, deaf, dumb and orthopedically handicapped employees. For traveling allowance, conveyance allowance, daily allowance, for these 3 allowances, whatever the employee has actually incurred for official purpose, that much amount you will continue to enjoy the exemption, guys. Then you know, right, generally the salary income accrues wherever you render services. However, there's an exception. In the exception, condition number 1, the assessee happens to be an Indian citizen. Condition number 2, the employer happens to be the government of India. And condition number 3, the employee is rendering services outside India. If all these 3 conditions are fulfilled, then even though the service is being rendered outside India, still the salary income, the allowances, the perquisites, everything will accrue in India. After accruing in India, salary alone will be taxable, but the allowances and perquisites will be exempt. This exemption also you can continue to enjoy. Understanding. I'll repeat again. Under the salaries head, allowances, you will not get exemption. Allowances will be fully taxable under the default regime. But however, transport allowance, you will continue to enjoy the 3,200 per month exemption for blind, deaf, dumb and handicapped employees. Traveling allowance, conveyance allowance and daily allowance, you will continue to enjoy the exemption of whatever amount the employee has actually incurred for official purposes. Foreign allowance and perquisites, this is the point which I explained to you over here. this point will apply only if these conditions are fulfilled. Generally, salary income accrues in the place where the assessee renders service, but there is an exception. In the exception, three conditions are there. Condition number 1, assessee is an Indian citizen. Condition number 2, employer is government of India. And condition number 3, the employee is rendering services outside India. If all these conditions are fulfilled, then even though the service is being rendered outside India, still the salary income, the allowances, the perquisites, everything will accrue in India. And after accruing in India, the salary alone will be taxable. Allowances and perquisites will be exempt. This exemption assessee can continue to enjoy under the default regime also. He can continue to enjoy. Okay, now understood. Then after this, listen to me. Under the salaries head of income, if assessee is getting lunch perquisite, then you give the assessee 50 rupees per meal exemption, right? That 50 rupees per meal exemption also you will not enjoy if assessee is having any if assessee is following the default regime. So 50 rupees per meal exemption not available. Then under section 16, generally you get three deductions, guys. You get standard deduction, then professional tax. Whatever is the total professional tax paid, whether paid by employee, whether paid by employer, total professional tax paid, even that you get as a deduction under section 16. Then even entertainment allowance you get as a deduction under section 16 for government employees. But however, if assessee is doing the computation under the default regime, professional tax deduction will not be allowed under section 16. Entertainment allowance deduction also you will not get under section 16, which means under the default regime, under section 16, you will get only one deduction, and that is standard deduction, guys. Generally, under the normal regime, standard deduction, how much you enjoy? 50,000. But here, 75,000 standard deduction you will get. Okay, so this was your first point, your first impact of 115 BSE. Under the salaries head, LTC will be fully taxable, HRA will be fully taxable, allowances will be fully taxable. But however, 5 allowances you can continue to enjoy the exemption: transport allowance, traveling allowance, conveyance allowance, daily allowance, and foreign allowances and perquisites if these conditions are fulfilled. Then lunch perquisite of 50 rupees per meal exemption you will not enjoy under the default regime. And under section 16, only one deduction you will get, and that is standard deduction, and that too you will get 75,000 instead of 50,000. Okay, this was your first impact of 115 BSE. Then moving on to the second chapter, IFHP head. In the second head of income, see, if assessee follows the default regime 115 BSE, then in that case, let out property will not get impacted. The let out property computation will be the same whether assessee is following the default regime or not, doesn't matter. Let out property computation will be the same. What will get impacted is a self-occupied property computation. If assessee is following the default regime 115 BSE, then self-occupied property, interest on borrowed capital, deduction under section 24 we will not allow. So for self-occupied property, NAV is 0. Deduction under section 24 we are not allowing. So the net number will always be 0 only for self-occupied property under 115 BSE. Section 24 deduction will not be allowed. But don't forget, let out property will not get impacted at all. Okay. Then comes the third bucket, PGBP. In PGBP head, guys, 4 things. Number 1, additional depreciation you will not be able to enjoy. See, you can still enjoy normal depreciation, but additional depreciation you will not be able to enjoy if assessee is following the default regime. Number 2, section 35, scientific research. In-house scientific research, you can still avail the deduction, but if the assessee is making a contribution to outsiders, like to IIT, IIM, National Laboratory and all, for scientific research or research in social science or research in statistical research and all those contribution to outsiders under section 35, you will not get a deduction under the default regime. But mind you, in-house scientific research, you can still enjoy section 35 deduction under default regime also. Only contribution to outsiders only you can't enjoy. Then section 35 AD deduction for your specified businesses, cold storage, warehousing and all, that section 35 AD deduction for specified business you will not get. So if you're not getting 35 AD deduction, then on the 35 AD asset, depreciation you can enjoy. Okay, and lastly, this is the most important point, guys. Listen to me carefully. It has not been tested till now. In case you have any unabsorbed additional depreciation brought forward from earlier years, I'm not talking about the total unabsorbed depreciation. No. Like, let's take a small example, guys. Let's say right now we are in the previous year 24-25. Okay, so we have unabsorbed depreciation which is brought forward from previous year 23-24, let us say. The total amount is 1 lakh. Now out of this 1 lakh, let's say 90,000 is unabsorbed normal depreciation and 10,000 is unabsorbed additional depreciation. Okay, now current year, let us say you are having some PGBP income, you're having some capital gains income and all. Against this, generally we can adjust brought forward unabsorbed depreciation. Generally we can adjust it, guys, against any head of income except salaries, except casual income. Against any other income we can adjust unabsorbed depreciation brought forward. But however, we can, if assessee is following default regime in the current year, this 90,000 brought forward normal unabsorbed depreciation, this only we can adjust against current year incomes. The brought forward unabsorbed additional depreciation, this 10,000 rupees, no, this brought forward unabsorbed additional depreciation of 10,000 rupees, this we'll have to ignore. Understanding? So whatever is the unabsorbed depreciation 1 lakh, inside this I will see how much is the unabsorbed additional depreciation 10,000. This I will ignore. This I cannot adjust against current year incomes. And then one more thing, you will also have to reverse it, which means you will add it back to the block. You will add it back to the opening WDV. Okay. Then number 4, capital gains head will not get impacted because of 115 BSE. Whether assessee is following default regime or normal regime, capital gains computation will be the same only. Okay. Then comes your IFOS head. Under IFOS head, 2 points, guys. Number 1, family pension. Family pension, generally how much deduction do you get? 15,000 or 1/3 of the pension received, whichever is lesser, that is a deduction that you get generally. But under 115 BSE, instead of 15,000, 25,000 will be the limit. So under 115 BSE, family pension 25,000 or 1/3 of the pension received, whichever is lesser will be the deduction. Okay. Second point under IFOS, in case assessee is an MP or MLA, if he is getting daily allowance or if he is getting constituency allowance, under the normal regime, these are going to be exempt, guys. But under the default regime, whatever daily allowance you get, whatever constituency allowance you get, no exemption, fully taxable. Okay. Then number 5, under the clubbing number 7. Number 7, under the clubbing chapter, section 1032 exemption you will not get. Generally, whenever a minor child's income is clubbed with the parent's income, the parent enjoys 1,500 per child exemption, guys. That 1,500 per child exemption you will not enjoy under 115 BSE. Then under the set off and carry forward chapter, loss from house property, you can do only intra-head adjustment, no inter-head. You can't carry forward to the next year. You can't bring forward from the last year. You can only do intra-head adjustment of current year loss. If you're not able to do intra-head, that's all, it will lapse. You can't adjust it against other heads. You can't carry forward to the next year. Also, if you have brought forward loss from house property of earlier years, you can't bring it forward to the current year. You can't adjust it in the current year. So loss from house property, you can only do intra-head adjustment of current year loss. Alright guys, and finally coming to chapter 6A, if assessee is following 115 BSE, chapter 6A generally we don't get. But 3 sections under chapter 6A we will still enjoy. Section 80JJAA, 80CCD subsection 2 and 80CCH subsection 2. Other chapter 6A deductions you will not get. 80C, 80D, 80TTA, 80TTB, all those sections you will not get. Under default regime, only 3 sections you will get in chapter 6A, 80JJAA, 80CCD subsection 2 and 80CCH subsection 2. Other sections you will not enjoy. 10AA also you will not enjoy. Okay. Now listen, when it comes to 80CCD subsection 2, under the normal regime, how much maximum deduction do you get, guys? 80CCD subsection 2, employer's contribution to NPS. Under the normal regime, generally you get maximum 10% of salary as a deduction. But if the employer happens to be central government or state government, then the maximum is going to be 14% of salary as a deduction, guys. But however, if assessee is following the default regime, doesn't matter who the employer is, irrespective, the maximum deduction is going to be 14% of salary. Okay, so this is your entire discussion with respect to the impact of 115 BSE on your income computation. So each of the chapters one by one we have discussed. Now see, I want you all to make a small observation. Because of 115 BSE, generally I take away the benefits from you guys. I am taking away the exemptions from you. I am taking away the deductions from you. I am taking away the benefits from you because of 115 BSE generally. But however, because of 115 BSE, in 3 places I give you extra extra benefit. The three places are: number one, standard deduction, guys. Generally, standard deduction is 50,000 only, but under 115 BSc, you get 75,000. So you're getting an extra benefit. Then number two, family pension. Generally, the number over here is 15,000 for deduction, but under the default regime, instead of 15,000, you're getting a higher deduction, 25,000 deduction. So even this becomes a benefit for you. Then third place, under ATCCD subsection 2, generally maximum limit is 10% of salary only, but under the default regime, 14% of salary is the maximum. So a higher deduction you're getting. So you're understanding, generally under the default regime, I snatch the benefits from you. I take away the benefits from you. I take away the exemptions from you. I take away the deductions from you. But because of 115 BSc, in three places only, you get extra benefit. One is standard deduction, the other is family pension, and the third is ATCCD subsection 2. In these three places, you get extra benefits, extra deductions. Okay. And finally, guys, can we keep changing the regime? Can we keep jumping between 115 BSc and normal regime? Can we keep jumping? Generally, see, it depends upon whether the assessee is having PGBP or whether he's not having PGBP. If the assessee does not have PGBP, then he can keep changing, no problem. 1 year he's following default regime, then he's opting out, then he's coming back. He can keep jumping here to there, no problem at all. But if assessee is having PGBP, guys, then assessee can opt out once and he can come back once. He can opt out once and then he can come back once, and once he comes back, he has to stay under the default regime only. Like for example, let's say in year 1 assessee was following the default regime 115 BSc. Okay, then in year 2 assessee decided to opt out. Assessee decided to go to the normal regime, so which means assessee has opted out, guys. Then let's say in year 3 also assessee was following the normal regime, but let's say in year 4 assessee decided to come back to 115 BSc. Yes, we will let the assessee come back. So assessee can come back. But now tell me, in year 5, assessee is saying, I want to go back to normal regime. I want to opt out. Will you let the assessee opt out? No, you can opt out only once, assessee. You have already opted out in year 2. Now you've come back to 115 BSc. You have to continue to stay under 115 BSc only. You have to continue to follow the default regime only. You can't opt out again. You can opt out only once. You can opt out once. You have already opted out in year 2. Now that you've come back to 115 BSc, you have to stay within 115 BSc only. But however, later, if he does not have PGBP anymore, let's say he shuts down his business, he's not having PGBP anymore, then he will fall under the first bucket, guys. He's not having PGBP. So if he does not have PGBP, then he can keep changing, no problem. Understood, guys? And now coming to the last point, if the assessee files his ITR late, then the assessee has no choice. Assessee has to follow the default regime only. Assessee cannot opt out of the default regime. Understanding? I'll repeat again for you. Listen, look at this. 1 second. If assessee has filed ITR late, then the assessee's ITR has to be as per the default regime only. Assessee will not have the option of opting out. Okay, it has to be as per the default regime only. If assessee has filed ITR on time, here assessee can choose, does he want to do the computation as per the default regime or does he want to opt out and come to the normal regime? He will have two options. But if he has filed ITR late, then in that case assessee has to stay under the default regime only. Assessee cannot opt out to the normal regime. Understanding? So this was your entire discussion with respect to 115 BSc, guys. But before I close this session, one very interesting analysis I want to show you with respect to chapter 6a. Okay, I want you to listen carefully. See, under chapter 6a, tell me your chapter 6a part C sections. You have 3 chapter 6a part C sections, guys. You have section 80 JJAA, you have section 80 QQB, and you have section 80 RRB. Right, guys? Now, I'll just tell you the points first. These are your chapter 6a part C sections. Second point is, if assessee files ITR late, then assessee cannot enjoy chapter 6a part C. Assessee can still enjoy Chapter 6A Part B, ATTTA, ATC, ATD, ATG, all that assessee can still enjoy. But Chapter 6A Part C, assessee cannot enjoy if assessee files ITR late. Then comes my next point. If assessee files ITR late, assessee has to stay within 115 BSc only. Assessee cannot opt out to normal regime. Assessee has to follow the default regime only. And then one last point, guys. If assessee is following 115 BSc, then in that case, assessee can claim Chapter 6A. Only 3 sections assessee can claim. What are the 3 sections assessee can claim? Number 1, Section 80 JJAA, then Section 80 CCD subsection 2, and lastly Section 80 CCH subsection 2. Okay, now I have given you 4 points over here. Okay, and now I am going to create one nice khichdi for you all. Listen to me. What are the 4 points? I first told you what are the Chapter 6A Part C sections. Are you noticing, first of all, Chapter 6A Part C sections, and under 115 BSc, which sections you can enjoy under Chapter 6A? First of all, they are different. Only thing is 80 JJAA is common, but the other 2 sections are different. Okay. Then I told you if assessee files ITR late, then Chapter 6A Part C assessee cannot enjoy. Then I told you if assessee files ITR late, then 115 BSc only assessee has to follow. Basically, assessee cannot opt out, cannot come to the normal regime if assessee files ITR late. Okay. Now my question for you, on the basis of all this knowledge, answer my question. My question is, assessee has filed ITR late. Now, under Chapter 6A, which sections can the assessee claim? Tell me. Assessee has filed ITR late. Under Chapter 6A, which section can the assessee claim? Tell me. What will your answer be? If assessee files ITR late, point number 1, assessee has to follow the default regime only, which means assessee cannot opt out. So 115 BSc only. Under 115 BSc, which section you can enjoy in Chapter 6A? 3 sections you can enjoy: 80 JJAA, 80 CCD subsection 2, and 80 CCH subsection 2. But however, 80 JJAA is a Chapter 6A Part C section. If assessee files ITR late, Chapter 6A Part C you can't enjoy. So 80 JJAA you can't enjoy. So if assessee files ITR late under Chapter 6A, assessee will be able to enjoy only 2 sections, 80 CCD subsection 2 and 80 CCH subsection 2. Extremely interesting analysis this is. You should tell me in the comment section below whether you knew about this analysis or not. Got it, guys, everybody? So if assessee, so there are multiple points involved over here. If assessee files ITR late, you can't opt out. Your computation has to be as per the default regime only. But and under the default regime, only 3 sections you can enjoy. But however, if assessee files ITR late, Chapter 6A Part C I will not allow. 80 JJAA is a Chapter 6A Part C section, so you will not get this deduction. You will get only these 2 sections only. No other section possible under Chapter 6A if assessee files ITR late. Only these 2 sections possible: 80 CCD subsection 2 and 80 CCH subsection 2. Understanding? Yes. So with this, I think we'll close this session over here.